All right. We are going to get started on the final session of the day. Laura and I are going to tag team on this. So we're going to be talking, we're going to try to bring together all the things we've talked about in more of a conceptual way. So we want to talk about distinguishing budgeting from accounting, how budgets fit into finance. There's all these words. We'll see if we can give them a little bit more meaning. Understanding fund sources, fund uses, understanding the role of carry forward to reserves. I'm sure that will be a very fun topic. And incorporating the element of fund availability duration. So these are the topics we're going to go over for this next hour or so. And we're going to start out by talking about what is the difference between accounting, budgeting, and finance. And we have this slide where we talk about how budget is the future, we're planning ahead, and accounting is the past, right? So actuals versus plans. We are doing all the stuff we just talked about, the whole budget cycle process. That's how you get to your budget. And on the accounting, you're talking about recording, reporting, analysis, and audits, what folks on the finance team here talked about a lot yesterday. Finances encompass both of them and how our funds flow and really understanding your resources and the resource flow. There we go. Oh, we were going to trade off on that one, weren't we? All right. We kind of coordinated it. We'll see how it goes.
Not as well rehearsed. All right, this is me.
This is you. Okay.
All right, so understanding finance means understanding how funds move around. So we are going to start an olive oil business. Starts with owner's stake and borrowing. So the owner says, I'm going to start a business. Let's see what funds I have available to do that. And then what funds we need to get from a bank or some other source to kind of create what we need to run a business. That leads into investing in the business, inventory, machines, building, land, whatever we need to start our olive oil business. Trees, maybe. And that leads us into operations. So we'll take all that investment that we've done in the financing and put it into operating our business, generating revenue, and then hopefully a profit at the end of the day. And then that goes back to the beginning, goes back in the owner's pocket, and then you start the cycle all over again, figure out what else you need to do to keep the business running and keep generating profits. So this model, just kind of taking the business example and putting it into something that's same for the university. It's the same concept, it's just different terminology. We use sources and uses instead of revenue and expenses, net assets instead of owner's stake or equity. But all the different components are very similar to operating a business. They're just have a little bit different functionality related to them. All right, and I did want to point out the statement of cash flows. So Denny mentioned it earlier as a very important financial report or part of the financial report. And it really is something that helps you understand kind of where the money comes from and where it goes. So operations is really where you look at if you have positive operating cash flow, it means you're actually generating money. And then what you do with that operating cash flow is how you use it to get to your ending cash balance. So are you investing in the business? Are you financing, so getting debt? So it really just tells a story of how your business operations are. So I do encourage you to take a look at a cash flow statement because it is really interesting and it kind of encompasses everything together, not only just the operational standpoint, but all the intricacies of the balance sheet as well. All right. So we're going to take a little bit more time and go through some of the sources and uses as it pertains to the university.
Switch. Okay. Sorry, I've got two slides here. Okay. So a lot of you have seen this pie before, but when we classify our sources, we classify in a couple different ways. One is fund type, and so that's what all of these pieces here represent, all the different fund types. And as you know, there's fund numbers, and there's a whole bunch of different ones in there, potentially. And then also based on restrictions. So when we think about our resources as the university, the things that are considered unrestricted are basically the indirect cost recovery or the F&A that Mike just talked about. It comes back and we can spend it how we want. We generate it based on what we actually have done in the past. Tuition and our state unrestricted. When we say unrestricted, it doesn't mean there aren't any rules, right? It means we can use it for any part of the operation. Whereas with, for example, grants and contracts, you have to do what you got that money for very specifically from your granting agency. So that's two different ways that we look at that. And we keep track of them to make sure that we are accountable to their source, right? So who we are accountable to from what source those resources are coming from. So these are just some more examples. And some of the unrestricted funds can also be designated for certain purposes. You know, yesterday I was talking about how the current state budget says, we're going to give you all this money and we're going to tell you how to spend part of it. That's a way that it gets a little bit restricted, even though it's technically unrestricted, right? So it depends on the situation in some cases of how that works.
For financial reporting, so we talked a little bit yesterday about, so these are our uses, right? We noticed that there's two different ways we classify our expenditures, and one of them is the higher education function code. So like Jim talked about as well, these are the higher education function classifications, and this is UC Davis. So we're about $5 billion in operating expenditures. This is 19? Is this the budget for 19?
18 actuals, I think.
All right, but you can see the different classifications, the medical center being the largest one, instruction and academic support being another one. And this is really, when we talk about the function code, is how we get compared across other universities. So, thanks. And then we have the natural classification. This is what's shown on the financial reports, and salaries and wages, depreciation, and those more, I want to say normal, but those financial statement presentation numbers, and so we classify them in two different ways. Normally on a financial statement, you'll see them on the face of the financial statement in our SHRECNA or income statement in this format because that's what's required, and then usually in the footnotes is where you see the higher education classifications or how we actually use those funds. And this is a neat little schedule that we put together here at UC Davis. I don't know how many others actually do this, but this cross-references the higher education expenses with the natural classification. So you can see across the top the salaries and benefits and all those different classifications that we saw in that last pie chart. And then it cross-references it with the higher education classification. So it's kind of an interesting picture, but it does show you how they cross and how they relate to each other. So salaries and benefits, for example, you can see some of the biggest amounts there in the medical center, but then really, as you would expect, in instructional and academic support. All right.
This is me. So, and now I can't see anything on the screen. So sometimes different words are used for carry forward. That you can hear surplus, margin, reserve, but basically these are funds that you put in a savings account, kind of. You don't spend them; they're saved. The source of these funds of carry forward is retains the fund type and restrictions of what it is that you save those resources for. So when it becomes carry forward, it doesn't magically become more flexible. You still have to follow the same rules, but it does mean that your sources minus your uses had a positive balance that you might have a plan for in the future. And when it is spent, it's classified in the same way with expenditures. All right. So really, the way to think about carry forward is that it allows organizations to manage risk and provides opportunities to invest in priorities. So I'll give you an example. When I first started working here, I came from the state, and then the state agencies do not get to keep their carry forward. You have an appropriation. If you have a contract, you can encumber it for a few years, but anything left over goes back to the big state pool at the end of the year. So that causes some interesting behavior, and you can't really do long-term planning, right? So you have to really think year over year, like this year I need equipment, I need to put that in my request, or that sort of thing. So it causes different behavior when you don't have the flexibility, which I think is a good thing when I came to the university, but it can also lead you down paths of people wondering why you're not spending the money you got for a certain thing, right? So there's pluses and minuses, but it's really nice to think about you do have a way to manage risk, to plan for unanticipated things, and you get to invest in priorities. So you can really think ahead and say, okay, if I want to buy something, or I know we're doing a new program and it's going to take us a few years to ramp up, you can plan for that. So I think that is a big benefit of having the ability to do this. A few years ago, about 2013, our campus went through a process of trying to understand what kind of guidance should we give on carry forwards. And so when we did that, we went and had EAB, it's Education Advisory Board, it's an organization we're members of. They went and did an analysis for us of kind of what other universities do and what are the different approaches. And I thought this would be helpful to share because there are different approaches across higher education, and there are also different approaches within our organization. We have sort of a campus-wide policy, which I'll get to, but there can be different answers in different places. So approach A is where unit holds it and they use it. They accumulate carry forward and they use it at discretion. That's pretty much what we do here most of the time. Central campus review, we review it centrally, assess for reasonableness, no prescribed limits or further policy set. We do that. So that's kind of where we landed a little bit. There's some policy guidelines. Spend down. This is a little bit more like the state, but you have to full or partial spend down expected the next year for a partial spend down before asking to additional central funds. Some of your units might do that. I know that in FOA we have instructions that if we have carry forward over 5%, we need to explain what we're going to do with it, or they're going to take it and give it to someone else. So I'm working on my budget. Looking at Allison, hope they don't take my carry forward. Anyway, so you might have that same experience, and that helps your vice chancellor or your dean be able to invest where the funds are needed. So I joke with Allison, but I think it's actually can be a helpful practice for leadership to have that ability. A levy is applied. Might have happened here once in a while. Hold back some balances on certain things. Percentage-based limits, saying set limits and applied to certain types of funds or accounts, and absolute dollar limits. So there's all sorts of approaches, and this can be done, like I said, here at the campus level, we're mostly doing A and B, but there can be different practices within your units. Okay, so our guidelines here, and there is on our resources page on our website, there is a place where you can go and look at carry forward guidelines, and it has some sort of policy papers and then what our actual guidelines are. But what our guideline is that a prudent level is either 10 to 15% or 10 to 25% of prior year expenditures, depending on the fund type. For state funds, tuition, and certain fees, they're expected to be at the 10% level. And we kind of came to this based on some practices both in higher ed and other institutions that having 30 to 60 days cash on hand is a reasonable thing to think about. And for state appropriation and tuition, remember who we're accountable to, right? So if the taxpayers and the state and our students think we're just sitting on all this money and not using it to advance the mission and what they are asking us to do, there's a lot of questions that get asked. Some of you might have remembered, I don't know, 3 or 4 years ago, there was a big conversation about this in another state. I think it was Wisconsin, and their legislature ended up sweeping the carry forward of the university. And so just imagine if that were to happen for UC, right? So we want to make sure we are spending those balances and we have plans for them. It's much easier to explain why you have balances if you can show them the plan. So there are times where we're trying to make arguments for things with the state, and there was a time a few years back where we went out and said, we need to understand what are we doing with these kind of funds. So that's another reason why we asked you to start categorizing those and reporting that. I know it's an imperfect COBOL world, but we're going to get better at that. And it does help us to be able to look and explain what it is we have set those funds aside for. So other fund types, such as F&A recovery, gifts, self-supporting degree programs, are expected to be 10 to 25%, up to about 90 days. And that was also arrived at by looking at the risk in those programs. If you have a self-supporting degree program, your income and expense picture, mostly your income picture, can change pretty quickly if your enrollment plummets. Or if you're running a program where or you have some grants and you're using the F&A recovery for kind of regular operations and some grants are lost, right? So there does need to be a little more caution in managing your risk for those types of programs. So that's how we got to that. We review carry forward balances at the level 4 org annually. And little new information, we are next week pushing out a new carry forward report function in Aggie Budget. So any of you who are looking at reports in Aggie Budget, which all of you can have report access, even if you're not using it for planning this year, it's going to be much easier to use. You're going to be able to drill down and do a bunch of picking of orgs and sorting and by fund type without getting a spreadsheet from Adrena that has like 30 tabs of data and pivots and all those things. So we're hoping this will be a really good tool for you to do your own analysis, and we're going to be using this going forward. So that's going to be coming, and I think they'll probably talk about it at a coming Aggie Budget user group. But we do look at those balances. We look at how you are related to this. When we get budget requests, we might say, and how much carry forward do they have? Kelly asks us this all the time. So anytime a unit is saying they need more resources, she wants to know how much carry forward. And we expect the Dean and Vice Chancellor offices to review. So they submit their review with some comments, and I know that's done in different ways and how much is pushed down, but you should know how much carry forward you have. So some good practices for managing it. Oh, I just said it. You should know not only how much you have, but what generated it. Did you have a one-time change that you sort of had extra revenue for some reason? Is it an ongoing change? Are you starting to accumulate every year and maybe you need to think differently about your operations, or that you can have the opportunity to expand or invest? And then adjust your plans. Do you have a plan? You need to have a plan and track your commitments. So I know a lot of you do that in lots of different ways, and that's another thing we are working on at Aggie Budget, is to have a better way of tracking those commitments. But you really should be able to communicate what you're doing with those balances. Knowing the level of risk in the fund types and operations you manage and what to budget for, that's kind of going to like, what is the most risky thing I have and how much savings should I have in case something goes bad, right? That's a bit of your scenario analysis, worst case scenario, planning for the bad. But if you do that too much in fund sources, it doesn't go so well. So that's another thing to think about. Who you're accountable to, that's the fund type. And our system doesn't do this monitoring, you guys do. So we're gonna have more tools to allow you to do it, but there's no one else looking at this except you and us. All right, where are we? I'm still going, okay. The rest is me, oh boy. The university also holds and manages other types of reserves that are a little different than carry forward and have their own rules. So rate activities, those year-end balances have to be worked back into a rate. And there is a rule about being 15% of annual expenditure. So if you go through a rate review, you want to remember that you need to look at your carry forward. And that's because your customers don't want to be paying more than they need to because you're building balances, but you might need a balance to keep their rate steady for when you buy that new piece of equipment, right? Endowment payouts. DVAR conducts the annual review of the unexpended payouts. This is another thing. We're accountable to our donors. They gave you an endowment because they wanted you to have an income stream to spend. Sometimes we don't spend it. So we should try to spend it for the things they gave it to us for. So that's something that we look at from a development perspective. It's hard to say to donors, we need your money if we're not spending what they've already given us, right? So it is about making sure that we are doing what we're supposed to. Funds functioning as endowment, similar thing. If you put money aside, it is also a type of reserve where you might put it aside for something, but it really could be just a reserve. Like something really, really bad happens, you can't access that. It's different than an endowment, right? And then contracts and grants, there's different guidelines based on sponsor about what happens with reserves and how you need to manage that. Wait a minute, what happened here? Oh, well, I already said that somehow on both pages. University Student Aid Program, for those of you involved with financial aid, when our students pay their tuition, we use by policy from OP for undergraduates, 33% of that goes back into aid, roughly, for our students. And so there is a rule system-wide that can only be 10% carry forward. Auxiliary has some debt service requirements. If you're going to go borrow money for, let's say, a housing project, you have to be able to show that your annual operating revenues exceed operating expense by 25% in order to qualify for that financing. So in areas where we're doing capital borrowing, we have to keep some different balances. And reserves are a very specific fund category in the system. So that's why I say we use different words. A lot of times people talk about reserves, but reserves in the accounting system are really for specific set-asides for self-supporting auxiliary and those sorts of things for improvement in equipment. I'm gonna pause for a moment, see if we have any questions. So the other thing that's good about having carry forward is that we invest it, right? So we were talking about that earlier. So all the balances that that show up in your accounts, those are all invested. So we don't really want to run on the bank. We want you to use them wisely, and those investment incomes do come back to UC Davis, and they go into our campus budget process. So a lot of times that is part of our core funds that we are managing on your behalf. And when you look at, for example, the Regents budget that OP puts together, they assume a certain amount of investment income coming back into the campuses. So their planning knows about how much we have of that, and that gets used by the campuses. Okay. Oh, you want to do this one? No, she doesn't want to do it. Okay. So this is about timing and duration, right? So you have sources, you have uses, you have reserves. Certain types of resources you can count on as being ongoing. The word permanent starts to have less meaning some days. We used to think about the state funds as permanent, and then we lost $100 million a few years back. So recurring, something that's your appropriation that you generally can expect, your revenue, certain level of revenue. So what is your stream? So it's the tree that keeps on giving you money, right? And you want to use those permanent sources for things that are pretty much ongoing permanent uses. A lot of that goes into our people, right? So you need staff to do your work. That's what you want to make sure they're funded on. Not always, sometimes you have limited term, but that's how it works. One-time, limited term, temporary, you get some one-time funds, you get a gift. You want to use those on one-time things. This was an idea of doing tickets for something, I don't remember. But you want to do it for things that are one time, you're doing an activity. So those are the way you want to think about the types and duration. And then carry forward is really your savings, right? And you also mostly want to use it on one-time things or multi-year things. So one time could be one time really once, or one time could be you're using it over 5 years, right? So that's another way to think about your planning. So we're going to do a little practice. Just a little practice. Okay, on your table, there is a little sheet that looks like this. And what we're going to ask you to do is to kind of using what you've learned, what we've talked about, and remembering that scenario you used this morning. We're going to use that again. Think about how you would fill out this table, which is really just a version of, wrong way, that table, for your project. So what are the kinds of things that in your scenario that would end up in the recurring or ongoing or one time for your sources, your uses, and what are the appropriate ways you might want to think about planning for your use of reserves? So we're going to go ahead and take, not dollars, you don't have to do dollars, just categories, types. It's really thinking about types, okay? So you don't have to make up money, just like the types of expenses and the types of revenues or sources you might have for your scenario. Does that make sense? All right, I'm going to give you 5 minutes, all right? All right, our time is up. Time is up. Wrap it up. I didn't give you a warning, sorry. Think I should pick on anyone one more time? A couple more times? We're running ahead. Be good to know what you guys thought. All right. I'm gonna ask for volunteers again, and then I'm gonna just walk to a table and hand the mic to someone. Scenario 1, anyone? Volunteer, tell us what you talked about last time. I know you want to be clapped for. Scenario 1, you guys, you already did it once, but I could give it, no, you guys didn't do it. I'm sorry. All right. Who's doing it? Oh, pass the paper. Shireen, I know you can do it. All right, here we go.
I forgot what I'm saying. This after lunch thing is kind of tricky.
I'm sorry, it's after lunch. I know.
Which was very good, thank you.
Tell them what you're doing.
So we started a new self-supporting degree program, and so, Shireen Lovell, Vet Med Dean's Office. So for sources, so for recurring, ongoing, or permanent funding, we thought their sources would come from tuition, fees, endowment earnings. And then for the uses of some of that of those funds, we would put in place payments for our faculty, the professional salaries, and overhead costs, facilities, and marketing for new students. And then for carry forward and reserve on the recurring funds, we would potentially save for system improvements, software related to the course if we were going to do the course online. And then back to, in our scenario, actually one of the reasons why we needed to explore this idea of a new self-supporting program was because without this new successful program, our whole department would be in jeopardy. So we are going to, so the carry forward would then go back to the dean's office to help support some of the other programs. And then the one-time sources would be from gifts, startup funds, grants potentially, and then the uses would be any kind of temporary staff, initiatives, marketing, recruitment.
Great. Thank you, Shireen. Good job, good job. Okay, scenario 2. It's all one right here. I'm moving. What? I can't see any green. Where's the green? Wait a minute. Over here. I don't have to go that far. Ariel, Christina, anyone? It's not about being right. It's okay.
So
Do you want to introduce yourself?
I'm Robin Souza.
And which one did you
2. We had 2 with the student fee funds that were decreasing, and our costs are gradually going up. Recurring ongoing sources, student fees, state funds, contract and grant, and endowment. One-time limited term or temporary sources, it would include loans, one-time awards and initiatives, travel awards, salary savings, programmatic awards, bridge funding, UCOP funding, gifts, income and revenue agreements. Uses would include salary and benefits, operating costs, travel and entertainment, financial aid that we give out. One-time limited term uses would be contract appointments, temporary employees, initiatives, one-time programs, pilot activities, seminars, and symposiums. I wasn't sure, on the carry forward reserve, did you want uses of it or how they're created?
Well, what you would use it for. And you have negative reserve.
Right, we ran out on that. Yeah, that's it.
There we go. Yeah, a little tricky with the deficit. Sorry, thank you, Robin. Good job. Let's clap for her. Okay, last one. Volunteer, or I'm heading towards scenario 3. Anyone? All right. I'm going towards this table, and it can't be Joe doing the answers. Oh, you're 1. Never mind. All right. You guys are hiding the papers. Oh, wait, they're white. You're 2. Or you just traded. You're like passing them, right? Is that what you're doing? Nice try. Oh, back here. You did it for me, though, before. You guys? 1? No. You guys? This is like mostly the planning staff. Jennifer, were you participating? Okay, I'm going to give them a pass. Jennifer had to put the presentation together. She doesn't have to answer the questions. Okay. All right. I'm going to give up in just a moment. I see the white right here. Mandy, you guys were scenario. No? You do. All right.
Sure, why not? I came in later, so they're going to make me do it. So it's going to be great. I'm Juliana Tuttle, and I work in student affairs. And so we had the situation where we had a facility that we needed to make self-sustaining. So our recurring, ongoing, or permanent funding, our sources are recharges and external fees that we're charging. The uses we would use that for include equipment maintenance and ongoing replacement, as well as staffing. And that was where we would generate a little bit of carry forward or reserve if we were able to, if it existed. And some of the one-time limited term or temporary funds would be campus subsidy that we're currently getting, and any grants, donations, or gifts. And then we would use that for marketing or outreach materials, especially in this situation, as well as any temporary help to get it started and training manuals.
All right. Thank you, all of our non-volunteers. You did awesome anyway. All right. So we are wrapping up, and I really hope that this was a useful couple days. We're going to be ending early. I'm sure that won't make you sad. We do have, I believe, one more poll, which I think you guys already started answering the questions for. Oh, one more. Yeah. So we wanted to know, what is the most valuable thing you learned at the symposium that you can put into practice in your daily work? And if you didn't already answer, you can keep answering. Budget, information, lots of information. Developed anything, travel, accounts, team, awesome guidance. Higher ed function code picture. Breakout. Develop, okay. Networks, good. Great. Networking, it just got really big. Awesome. Okay, so we are very glad to have been able to provide this opportunity. We do want to make sure that when you get the survey next week and an email that you give us feedback. We're hoping we can make this an annual event. This year was our first time. We were trying to kind of set some groundwork and build on this in the future. We are, for your colleagues who are on the wait list, there were a lot of people on the wait list and a lot of people that probably aren't on the wait list because there was a lot of interest. We're thinking about doing this exact same thing again. So in a few months, probably after fiscal close and the budget season. But we're going to try to do this again, and so we can get more people through this. And then we're working on putting up the materials and things online. So we'll also let you know when all the materials are available. So thank you for coming. We really appreciate it. Thank you to the team, the organizers, everyone.